Let's move to the next. Here we discussed earlier the mode of financing. Okay, we are saying why they are encouraging the investment instead of the interest. So equity finance by the owner. Because the interest capping rule, they are discouraging the borrowing, but on the other side, they are encouraging the equity finance by the owners. So here the point is very important understanding purpose, because why we gonna, here will be detailed discussion, equity finance by the owner. What are the benefits from the equity finance by the owner? Permanent source of finance, no maturity date, because we normally seen the share capital in the companies. So this is not the owner will give you today and tomorrow they will come and ask, okay, no, give me this back. That's not happening like that. So this is a permanent. But if you take the loan from the bank, so they will ask, okay, what is the duration of the loan? 1 year, 2 year, 1 month, 6 months. After that date, you have to pay them back. So that's why we're saying equity finance is the owner, permanent source, no maturity date, discretionary payments. What is discretionary? If once you have the profit, you will pay them. Then the redeemable preference share, that also we have to understand, redeemable and irredeemable. That because from there some element of the interest is there, so that element we are calculating under the interest capping rule. So cost of equity is a dividend and optional. Because the cost of equity, you will pay the dividend. Once you have the profit, you will distribute, and this is not mandatory or not on the specific timeline you will pay. This is the benefit what we are advantage we are seeing under the equity finance. Let's see the next point, that is the debt finance other than owner. Earlier we seen the advantage of the owner, equity finance. Now we're gonna see that debt finance other than owner. What are the other finance? Bank loan, redeemable preference share. Here we are seeing irredeemable, but here you see redeemable preference share. The main difference in the equity finance is a irredeemable preference share, and this is redeemable. So mostly, hope you guys are familiar what is the redeemable and irredeemable. Okay, now on the debt finance, we've seen the redeemable preference share and the issuance of bonds, sukuk, debenture, notes. Mostly we are familiar with such. The government issue the debentures, sukuk or bonds as part of monetary policy to control the cash in the market. They have the different policies based on that. They proceed on that. Next is the leasing of asset. Bank finance the asset you can take on that, but this is the temporary source of finance. Next is the non-discretionary payment and non-discretionary payment. What does it mean? This is not the optional. You have to pay. Here we are saying the discretionary, as per if you want to pay, you can pay. Optional, but this here is in you have to pay interest, because if you're not paying the interest amount or installment to the bank, if you have the lease asset, bank will come and take the asset also. The common example is the car. Okay, if you're not settling the bank on time, they will seize your car. Let's move to the next, the dividend and the profit distribution to the owners. Distribution to the owner, any payment not fixed or contingent on the financing program. Here again, we are understanding why we need the cash financing and what are the difference. We are understanding because if you pay the dividend to the owner, you may pay at any time and may not pay. Now here we can say the shares have the two category. One is because some share will be part of equity and some share will be part of debt. So the debt part is come under the interest capping rule. The whole exercise we are doing, okay, which part from the here that will be, we can do the calculation in the interest. While doing the interest, if we already deducted such amount, so we have to add back while calculating the interest capping rule. So equity is a irredeemable, debt is a redeemable. Here in redeemable, what is redeemable? Because they can, the shareholders, they will ask, okay, give us money, our money back. But they normally in such scenario, they do not have the voting right also. They will demand the interest on this agreed term also, because we are paying the dividend, but actually the interest. Why in the term we will familiar redeemable, we are paying the dividend on priority basis. The irredeemable, we are not paying the on priority basis. So that is the optional, but here we have to pay the dividend on priority basis, on mandatory basis. Now we will move next and see what are the additional things. If they pay the dividend under redeemable, this is the expense. But if they pay the dividend, that is not the expense. Another difference for the equity and debt. Even we have the shares, but the same under the equity method is not the expense. The dividend company and local dividend is exempt, but that cannot be deducted as the expense. On another side, the debt that you are shares through the debt model, that is a redeemable model, you are paying the dividend, that will be interest, and that will be expense that you can deduct from your profit, from taxable income. But how much you can deduct? Again, such portion we will add into net interest. While calculating the net interest, maybe some interest expense, some interest income, some dividend income for the redeemable share, that also will be go and added over there. To test that rule, interest capping rule, we have to take this figure also. Hope the main point you guys understand why we did this exercise. To just take out this point. This point will be added back to while doing the interest capping rule. Shares, equity shares, ordinary share, preference share. Again, another part we are going to understand from here. Preference share, dividend liquidation. They will get the dividend, the same dividend what we are referring over there, and they will get the priority in the liquidation also, but they don't have the voting right. But in ordinary share, we will understand the same concept. Here, the preference share, the same. Here we understand the redeemable preference share, debt liability. This is the debt liability. Okay. Irredeemable equity, no payment. Under the preference share, again, the two category. One is the normal share, other is the normal share means the ordinary share. The second is the preference share. Under preference share, there is the two category. One is the redeemable preference share, other is the irredeemable preference share. Redeemable, it will fall under the debt, and the amount of the dividend is paid as the expense. The fourth is the entertainment expense. The fourth entertainment expense, what are the entertainment? Meals, transportation, air ticket, admission of gym, movies, such kind of benefit the big corporate they are giving to their employees, giving to their stakeholders, giving to their management as well. So now we have to see what are the such entertainment expenses like the annual dinner, annual party, to celebrate their annual the profit or the any project they achieve. They have the big milestone that they completed that, so they might do some celebration. So in that celebration or in such event, they might invite the employees also and invite their customer also, or might invite their uh, owner also, partner also. So because if we have, there is a private element, we have to see that may be allowed and disallowed. In terms of employees, we already discussed whatever the entertainment expense belongs to employee is 100% deductible, 100% is allowed, 100% is you can adjust from the taxable income also. But whatever the other stakeholders, that is the shareholder, customer, and the owners, that is the 50% is allowed and balance 50% is disallowed. Here the Article 32 that represent entertainment expenses and this disallowed expenses also. So here we are seeing the customers, owners, partners, suppliers. So this is the 50% allowed. Okay. In the same way, we are saying the 50% allowed, and same way you might say 50% disallowed. Just to have the better understanding, you might say 50% allowed and might say 50% disallowed. Other way around, it will be the same. Staff, 100% is allowed. 100% you can deduct. If the staff is 100% allowed, no need to check the private element. Let's move to the next point. Next, the drawing of goods from business for personal use. We are taking the example for the personal use, and we will understand. Normally, we've seen the even from accounting also, the personal use is not allowed expense for the business. But anyhow, let's go through this example for better understanding. Our income sales is a 100K and cost of goods sold is a 50 million. Then we are just doing the calculation as normally in the audit report or for audit financial, we are doing opening inventory plus purchase minus closing inventory, total cost of goods sold minus the drawing of the owner. Why? Because when he owner taken the goods, we normally expense out. So we are doing this calculation to see what is the actual cost for the business. Whatever the total cost is coming minus drawing, you have to remove from here. Now your cost will be reduced, your profit will be increased. Now here in terms of the car, normally the people take the vehicle for the companies give the vehicle to their employees for the business trip, normally salespeople or the procurement team or the senior management. They give for the business purpose or the private purpose. So this is a very gray area how to define that. Even they give for the business purpose. Our understanding, even they give for business purpose, how to define that? How to define that? You may set some reasonable method where you can justify the the business usage and private usage. But if is a small amount or the small topic that do not invest more time, just exclude as a from the taxation. The same concept you may take from the VAT also. The VAT some guideline is already there on such travel expenses, telephone expenses. Might be we already prepared some internal some benchmark, internal some calculation. Use the same calculation. See, one question from Mohammed Hasnan. Yes, the owner salaries are allowed subject to ALP rules. Yes, the owner salaries are allowed, but this is allowed in juridical person, not under the natural person. In juridical is allowed, but is as per ALP rule, arm length rule. Anyhow, let's move to the next. The point number 6, we said in term of VAT, might be you already have some benchmark or analysis. So use the same benchmark. If you have the big amount of that, then you do have to prepare your own analysis and do the segregate the business use and the private use, and then do the needful how much will be allowed expense and how much will be disallowed. Because private element, normally we are aware this is not allowed expense in terms of taxation. 7 is recoverable input VAT. Irrecoverable VAT allowed expenses. So here the important part, recoverable input VAT. Let's assume that you have the VAT that you able to recover as per the law. You can recover. You are allowed to recover, but due to some negligence or due to some your accounting team may be not familiar, or maybe some typo error, or maybe some any other reason, you not recovered that VAT from the FTA. Now you put as expense. So under corporate tax, they're saying if such amount that you can recover as per the legislation, but you did not recover, so that is not the expense. That will not be expense. If you have such scenario, you have to add back, because in accounting you already deducted. So your accounting profit is reduced now. So such expense you have to add back. While adding back this, your accounting profit will be increased. We are doing this adjustment to reaching the taxable profit. Hope you guys understand the recoverable input VAT. If it is irrecoverable VAT, yes, that is allowed. That you can deduct. That is the expense. That is allowed expense. 100% you can deduct. But irrecoverable, no. That you cannot deduct. Restricted vehicle, 1% by private use, entertainment expense. And you below example just to explain the same concept, what is the VAT. So normally we are familiar with the VAT, input VAT, the 5%, that if you can recover, you have to recover. If not, is irrecoverable, then it will be part of your expense. Expense incurred, bank fee, legal fee on taxable activity expenditure. Now here you have to, we have to be rational and do the analysis and take the relevant information. If expenses are done in terms of the bank fee, normally if we are receiving the payment from the customer and paying the payment from the customer, there is some bank charges. So such expenses are the business expense. But again, it might vary. There is a nature of expenses. Here's the exempt income. Now, exempt income is a local dividend. Local dividend, we already discussed, always will be exempt. We are almost reaching 2 o'clock. Now we're gonna see the losses on taxable income. Here quickly, I just complete this slide, but next we will start again from this same slide. Just go through from losses and on non-taxable activities, participating interest, that we did not go through that. Here's the next is a personal expense. Then is these are not the big points. Illegal action, bribes. Okay, these are not the, if you give the fines and payments and illegal actions, based on that you made the fine, payments, bribes, that will not be expense for deductible. If you already deducted, you have to add back. Personal expenses, we already familiar that this is the private element, it cannot be deducted. Now the 12th point, any other payment by the ministerial decision or cabinet decision. If they specified, yes, it's disallowed, so that you will be added back. Up to here, our topic is covered. So this 12 point under the first adjustment, we already covered. Under the first adjustment, the mainly are the initial 4 or 5 point, but other also for understanding we already discussed. Now, the second adjustment is less exempt income. That we will start our next session. So I'm closing this. So, but if you guys have any question, please let me know your question.